Welcome back to the deep dive. You know why you're here, right? You want to get ahead of the curve and understand what's really moving the market, right?
That's it. No time wasted.
So today we're going deep on some recent strategic investment moves. We've got some really fascinating stuff from Text Collie that's going to give us some serious insights into, how some smart people are thinking about the market and what moves they're making.
Exactly. And it's all about extracting, the essential information, the key takeaways. We're doing the heavy lifting so you don't have to.
Love that. So for our listeners today, what can they expect from this deep dive? What's on the agenda?
Well, first we're going to break down some pretty big stock purchases. And you know what's behind them. What's the strategy? Then we're going to zoom in on Nike. Yeah, Nike.
Yeah.
The whispers of turnaround. What's really going on there?
Interesting.
And finally, we'll tackle a topic that's always relevant, Can we really trust Wall Street's predictions?
Yeah, that's a big one. Always.
And most importantly, we'll pull out the actionable lessons for you, our listeners. How can you actually use this information to make smarter decisions?
Okay, so let's dive right in. Let's talk about some of these big moves in the market. What kind of investments are we seeing?
One of the most significant, and this caught my eye, is over $20,000 invested in Nike. 300 shares.
Okay, Nike, so what's the thinking there? They're not exactly a hot new startup.
Right, exactly. But that's kind of the point. The thinking here is about, their brand power.
Right, they're Nike.
Exactly. Nike. They can charge a premium. People, they're loyal. Yeah, not many apparel companies can say that. It's enduring, that brand recognition.
Yeah, I mean, that's not going away anytime soon. But I also remembered the source mentioned something about strategic shifts, new leadership.
Yeah, that's key. There's a new CEO, Elliott Hill, and a real focus on what they're calling a win-now strategy.
Win now. I like the sound of that. So what does that actually mean for Nike?
It means they're laser-focused on innovation, on fixing any kinks in their distribution, and really revitalizing the brand, making it cool again, And you know what else? The stock is trading near a 10-year low on a price-to-sales basis.
Okay, now you've got my attention. That sounds like a deal.
It could be. It could be. You're basically paying less for each dollar of Nike sales. Think of it that way. So it's seen as a potentially rare entry point, into a truly iconic company.
An iconic company, potentially at a bargain price. Now, what other moves caught your eye?
Okay, so this one's a bit different. ELF Beauty, $62 a share. A whole position was established, 667 shares, $42,000. That's a big bet.
Wow, that's a lot of faith in ELF. What's the story there? Why such a big investment?
The source actually mentions FOMO, fear of missing out.
Oh yeah, FOMO. We've all been there.
Right. But it also highlights a bigger trend, a shift. The beauty market is changing. Younger customers, online sales, and ELF, they're right in the thick of it.
Interesting. So high growth potential, but maybe a bit more of a risky play.
Yeah, exactly. It's all about, balancing that risk with the potential reward. And that's the key takeaway for our listeners, right? High potential gains usually come with higher volatility.
Right. Risk and reward. Okay, so what other sectors are they investing in?
Okay, so let's talk tech, specifically semiconductors. 111 shares of AMD, Advanced Micro Devices, were bought at $106 a share. Total investment, around $12,000.
AMD. Okay, semiconductors. And that's a play on the future of, everything, right?
You got it. They're in everything. And AMD, they're a major player. So this investment, it's a vote of confidence in their continued growth and their ability to innovate. It's a bet on their trajectory in a sector that's absolutely essential to the modern economy.
Right. Semiconductors are definitely here to stay.
Yeah.
And I think there was one more investment that we wanted to highlight, and that was an increase in an existing position in SoFi Technologies.
Yeah, SoFi. Added another $2,000 to that position. It's described as a high-risk, high-reward kind of play.
So definitely not for the faint of heart. What's the long-term outlook for SoFi?
Well, they're talking about, potentially huge returns, 10 to 50x over the next decade.
Oh, okay. That's a bold prediction.
Yeah, but remember, high risk, high reward. It's positioned as a calculated bet, for those who are really in it for the long haul and can handle the ups and downs.
Okay, so we've got these different investments, Nike, ELF, AMD, SoFi. Are we seeing any sort of overarching strategy here? Like, is there a common thread that ties these investments together?
Yeah, I think there is. It seems like they're focusing on, two main types of companies. Ones that are perceived as undervalued, like Nike, right? With that price-to-sales ratio. and then the high-growth potential companies, even if they're riskier, like ELF and SoFi.
So playing both sides of the field.
In a way, yeah.
Yeah.
But the real key here, the unifying factor, is the long-term perspective.
Right. Not getting caught up in the day-to-day swings.
Exactly. It's about recognizing the potential for big gains down the line, riding out those dips and coming out ahead. And this is a huge takeaway for our listeners, right? It's about looking beyond the short-term noise and focusing on those companies that have real long-term value and growth prospects.
Makes sense. All right, so let's shift gears a bit and dive deeper into one of those companies, Nike. The source talks about, potential turnaround. So before we get into the positive signs, maybe we should address the elephant in the room. What were some of the challenges that Nike has been facing recently?
Yeah, so the source highlights a couple of key issues. Declining sales, that's a big one, and then some issues with inventory management.
Okay, so kind of the bread and butter of any business, right?
Right. You got to sell your product, you got to manage it efficiently. For a company as massive as Nike, these issues can really, shake investor confidence.
Yeah, absolutely. Makes sense. But on the flip side, what are some of the positive signs that indicate, a potential turnaround, a comeback for Nike?
Well, the big one is the new leadership and the win now strategy we talked about earlier. This new CEO, Elliott Hill, he's brought in a fresh perspective, a new energy.
Right, so it's not just about fixing the problems, it's about moving forward.
Right,
Yeah.
exactly. And the source actually mentions that their recent earnings call was a banger, that they were very clear and effective in communicating their progress.
Okay, so they're walking the walk and talking the talk. What else is looking up for Nike?
Well, market sentiment and valuation play a big role. The source says that, the current low sentiment towards Nike has actually created a really attractive buying opportunity.
Interesting. So because people are down on Nike, the stock price is lower, which means it could be a good time to buy.
That's the thinking. It's like a sale on a quality product.
Mm-hmm.
And on top of that, you have to remember Nike's strengths. I mean, they have a global distribution network that is, unparalleled. And they are a lifestyle brand, not just an athletic apparel company.
Right. They've got that cool factor. Like you said, it's not just about the product, it's about the brand. And is there any evidence that they're, actively innovating, trying new things?
Yeah, absolutely. The source points to the launch of their Pegasus premium line and their partnership with Skims. These moves signal that they are listening to the market, trying to stay relevant, and tap into new customer segments.
Okay, so it seems like they're really making moves to turn things around. But is this going to be a quick fix, or are we talking about a longer process?
Yeah, good question. The source says a full turnaround could take 2 to 3 years.
Okay, so patience is key here.
Absolutely. But with this new leadership, the strategic changes, and, the potential for a really attractive valuation, Nike could be a really smart buy for those who are in it for the long haul.
So don't expect overnight miracles, but there's potential for a strong comeback. Now let's move on to something that I think a lot of our listeners will be interested in. The source takes a pretty critical look at Wall Street predictions. What are your thoughts on that?
Yeah, I mean, sometimes those predictions, they miss the mark. And the source gives a great example from last year, from 2024. Back in December of 2023, you had these big institutions, Goldman Sachs, Wells Fargo, JP Morgan. They all released their price targets for the S&P 500 for the end of the year.
Right. And what were their predictions?
Their predictions were all clustered between 4,200 and 4,700.
Okay, so pretty tight range there. And what actually happened?
Well, the S&P 500 closed the year near 5,900.
Wow, so they're way off.
Yeah, significantly off.
So does the source offer any insights into why these big institutions might have gotten it so wrong?
Yeah, they talk about something called herd mentality. Basically, it's the tendency for, these big institutions to think and act alike. And when that happens, when everyone's following the same trends, the same assumptions, well, it can lead to, some pretty big inaccuracies.
Right. Groupthink can be dangerous. So what's the lesson here for individual investors? Should we just ignore Wall Street's predictions altogether?
Not necessarily.
Yeah.
It's more about, taking those predictions with a grain of salt, doing your own research, your own due diligence.
Right. Don't just blindly follow the herd. And the source contrasts this with the idea of what they call sophisticated retail investors. What do they mean by that?
They're talking about investors who do their homework, who, understand the fundamentals of the companies they're investing in. And the observation is that these investors, they often outperform Wall Street because they're not, swayed by the short-term noise.
Okay, so it's not just about being a professional investor, it's about being an informed investor.
Exactly.
Right.
And the key takeaway here is really powerful for our listeners, Trust your research and stay disciplined.
Love that. Don't get caught up in the hype. Think for yourself. So as we wrap up this deep dive, what are some of the big picture lessons, some actionable advice that our listeners can take away and apply to their own investment strategies?
Okay, well, first and foremost, focus on long-term growth.
Yeah.
As we've seen today, those short-term fluctuations, they're just noise.
Right, the market's going to go up and down. Don't panic.
Exactly. Focus on those companies with strong fundamentals, with a real potential for growth over the long term.
Okay, long-term thinking. What else?
This might sound counterintuitive, but embrace volatility.
Wait, embrace volatility.
Yeah. Market corrections, those dips, they can be scary, but they can also be opportunities.
Right, buy low, sell high.
Exactly. Those dips can give you a chance to buy into great companies at a lower price.
Okay, so don't shy away from the dips. What's the next piece of advice?
Diversify strategically. Don't put all your eggs in one basket.
Right, spread the risk.
Exactly. Build a portfolio that includes a mix of, high growth potential stocks and more established companies. It's all about balance.
Got it. Diversification is key. And finally, what was that last piece of advice we talked about?
Be discerning about Wall Street hype. Do your own research,
Yeah.
and don't be swayed by the often fickle opinions of institutional investors.
Think for yourself. Be an informed investor.
Exactly.
This has been a really fascinating deep dive, really insightful look at some recent market moves. So as we wrap things up, what's the one key message that you want to leave our listeners with today?
I'd say that, the current market, it offers some really unique opportunities for investors who are, informed and who have a long-term perspective. And the information we've looked at today, the investments in Nike, ELF, AMD, the discussion about Wall Street predictions, it all underscores the value of, continuously educating yourself and staying ahead of the curve.
And for our listeners who are interested in exploring further, we've given you some great companies to start with. Nike, ELF Beauty, AMD.
Right. Just remember, do your own research, form your own opinions, and think about this. What if those, seemingly small strategic moves that you make today based on your own research, what if they compound into significant returns over the next decade?
That's something to think about. Thanks for joining us on the deep dive.
Until next time.